As we step into 2025, investors face a classic dilemma. Should you put your money into gold or stocks? With markets evolving rapidly, economic uncertainties, and shifting global trends, making the right choice is more crucial than ever. Today, we'll break down the outlook for both gold and stocks, exploring their risks, rewards, and what experts predict for the year ahead. Whether you're a seasoned investor or just starting out, this guide will help you navigate where to invest wisely in 2025. Today, we will talk about, should you invest in gold or stocks? 2025 Market Outlook. So before we start, make sure to hit the like button and subscribe to my channel. 1. Introduction and context. As we navigate through 2025, investors continue to grapple with one of the most enduring questions in personal finance. Should you invest in gold or stocks? This classic debate has persisted for decades because both assets serve distinct roles in an investment portfolio. Stocks represent ownership in companies and the potential for long-term capital growth, while gold is traditionally seen as a safe haven during economic uncertainty and inflationary pressures. Given the dynamic global economic landscape, geopolitical tensions, and technological disruptions shaping markets this year, it's crucial to reassess the merits and risks associated with gold and stocks before committing your capital. This article dives deep into the 2025 market outlook, evaluating current trends, forecasts, and strategic considerations to help you make an informed choice. 2. The current economic landscape and market drivers. To understand where to invest in 2025, it's important to first analyze the macroeconomic environment. The global economy is balancing between post-pandemic recovery efforts, rising inflation rates, and shifting monetary policies. Central banks worldwide, including the U.S. Federal Reserve, have signaled cautious tightening of interest rates to combat inflation without stalling growth. At the same time, geopolitical conflicts and supply chain disruptions continue to fuel uncertainty. This economic volatility often boosts gold prices due to its historical role as a store of value. Conversely, stock markets have shown resilience with selective sectors, particularly technology, renewable energy, and healthcare, delivering strong returns amid innovation and evolving consumer demands. However, market corrections remain a risk, especially in overvalued segments. Understanding these dynamics is key to gauging which asset class might perform better in the near term. 3. Why consider investing in gold? Gold has long been prized as a hedge against inflation, currency devaluation, and systemic risks. In 2025, with inflation stubbornly above target levels in many economies, gold's appeal remains significant. Unlike fiat currencies, gold cannot be printed, making it a scarce asset with intrinsic value. Furthermore, during geopolitical turmoil or financial market instability, investors often flock to gold, driving its price higher. Another advantage is gold's low correlation with stocks, which means it can reduce overall portfolio volatility. Additionally, the rise of digital gold investment platforms and gold-backed ETFs has made investing in gold more accessible than ever. However, gold does not generate income like dividends or interest, and its price can be volatile in the short term due to speculative trading. Still, for investors seeking protection and diversification, gold remains an essential asset in 2025. 4. The case for stocks in 2025. Stocks represent ownership in businesses and historically have offered higher returns compared to other asset classes over the long run. In 2025, the stock market is expected to benefit from continued innovation, especially in sectors like artificial intelligence, clean energy, biotechnology, and fintech. Many companies are embracing digital transformation, improving efficiency, and tapping into new markets, which bodes well for earnings growth. Additionally, rising consumer demand post-pandemic, coupled with improved corporate earnings, supports equity valuations. Stocks also offer income potential through dividends, which can be reinvested to compound returns. However, stock investing involves market risk and volatility, especially in uncertain economic conditions. Investors must carefully evaluate company fundamentals, valuations, and sector trends to mitigate downside risks in 2025. 5. Comparing risks and rewards. When deciding between gold and stocks, weighing their respective risks and rewards is vital. Gold's primary role as a defensive asset means it tends to outperform during times of crisis, inflation spikes, or currency depreciation, but it may lag during economic expansions and bull markets. Stocks, on the other hand, typically deliver higher growth but are susceptible to market crashes, regulatory changes, and shifts in investor sentiment. In 2025, the risk of a global economic slowdown, tightening monetary policies, and geopolitical uncertainties could cause heightened market volatility, impacting stocks more severely than gold. However, stocks offer the opportunity for capital appreciation and dividend income, which gold does not provide. Investors must assess their risk tolerance, investment horizon, and portfolio diversification goals before making a choice. 6. Diversification strategies and portfolio considerations. Rather than viewing gold and stocks as mutually exclusive options, many financial advisors recommend a balanced approach. Diversification across asset classes helps reduce portfolio risk and smooth returns over time. Including gold as a small but strategic portion of an investment portfolio can provide a buffer against inflation and stock market downturns. Typically, financial planners suggest allocating 5 to 10% of a portfolio to gold or gold-related assets, though this may vary depending on individual goals. Meanwhile, the bulk of long-term growth potential often comes from equities. Additionally, investors can diversify within stocks by investing across sectors and geographies to reduce concentration risk. In 2025, combining both gold and stocks in a well-structured portfolio is a prudent way to hedge against uncertainties while capturing growth opportunities. 7. Market outlook and expert opinions for 2025. Looking ahead, market analysts and economists present mixed but insightful perspectives. Some experts anticipate that ongoing inflationary pressures and geopolitical risks will keep gold prices buoyant throughout 2025. Meanwhile, others highlight that strong corporate earnings and technological advancements will drive stock market gains, particularly in emerging sectors like clean energy and AI. The consensus suggests a cautious but optimistic outlook for stocks, with volatility likely increasing as monetary policy evolves. Inflation trends will be a critical factor influencing both assets. Sustained inflation may favor gold, while successful containment could bolster stocks. Ultimately, savvy investors should stay informed, monitor economic indicators, and adjust their portfolios as market conditions shift. 8. Conclusion. Making the right choice for you. Deciding whether to invest in gold or stocks in 2025 is not a one-size-fits-all proposition. Both assets have unique roles and benefits that can complement each other depending on your financial objectives, risk appetite, and investment timeline. Gold offers protection and stability amid uncertainty, making it a valuable hedge. Stocks provide the potential for long-term growth and income, but come with higher risk. The best approach often involves blending these assets to build a resilient portfolio that can weather market cycles and capitalize on emerging opportunities. As always, consulting with a financial advisor to tailor investment strategies to your personal circumstances can help ensure you navigate the complexities of 2025's market landscape confidently and effectively. If you like this video and would like to see more like it, please give it the thumbs up, leave a comment, and click the button to subscribe.